Something historic is unfolding in the world of finance. Imagine Wall Street's doors swinging open, not just to Bitcoin but to Ethereum, a digital asset long seen as promising, yet always a step behind its older sibling in mainstream acceptance. Now, thanks to a groundbreaking decision from U.S. regulators, that dynamic is changing. The U.S. Securities and Exchange Commission has just issued a ruling that could send shockwaves through the entire crypto market. If you're following the trends, you know this isn't just good news. It might be the catalyst that sparks the next explosive bull run. In the next few minutes, let's uncover why Ethereum and Bitcoin are both poised on the edge of a breakout we haven't witnessed in years, and why this moment could redefine the future of digital assets. Welcome to another deep dive into the forces shaping global finance. If you're serious about growing your wealth, staying ahead of the curve, and understanding the most impactful trends in investments and cryptocurrency, you're in the right place. Here, we break down the stories that move markets and reveal the hidden currents behind the headlines. Settle in, because today's development may be one of the most significant in recent memory. The debate between Bitcoin or Ethereum has raged for years. Each side has its champions, its narratives, and its projections for the future. But recently, legendary market analyst Tom Lee made a statement that's reverberating through both Wall Street and crypto circles. Ethereum is having its 2017 moment. This is when Wall Street will finally take tokenization seriously, and it's happening on Ethereum. This is the biggest macro trade of the next decade. That's not idle hype. It's a call to action, a recognition that the financial world is changing, and Ethereum is at the center of that evolution. Right on cue, the SEC dropped a regulatory bombshell. For years, the commission hesitated, debated, and analyzed how to treat liquid staking, the process that lets Ethereum holders earn rewards for securing the network, while still allowing their assets to remain fluid and tradable. The big question: are liquid staking tokens, like those from Lido and Marinade Finance, securities? The SEC's answer, delivered on August 5, 2025, is decisive. Liquid staking is not considered a security. With those words, a massive barrier was lifted. Why does this matter? Because it opens the door for staking to be included in spot Ethereum ETFs. These are investment vehicles that let traditional investors, from hedge funds to retirees, gain exposure to Ethereum without needing to manage wallets, private keys, or navigate the complexities of staking themselves. Previously, the SEC's reluctance to bless staking in ETFs was a major stumbling block. Now that obstacle is gone. The market wasted no time reacting. In July alone, Ethereum led a record $4.39 billion in inflows to institutional crypto products. Of that, $2.12 billion went straight into Ethereum exchange-traded products. These aren't just retail investors chasing a trend. This is institutional capital, the kind that shapes long-term market cycles, signaling their confidence in Ethereum's future. Look closer, and you'll see the signs of a major supply crunch brewing. Ethereum's supply on exchanges is at its lowest level in years. More and more ETH is being locked up in staking contracts or moved to cold storage, out of reach for immediate trading. On the Bitcoin side, over-the-counter supply, the kind institutions use to make big moves quietly, is drying up fast. When both retail and institutional investors are accumulating and supply is shrinking, the stage is set for explosive price action. Meanwhile, Ethereum's network activity is booming. The ecosystem just hit a record 26 million daily transactions. This isn't just speculative hype. It's a sign that real-world utility, decentralized finance, NFTs, enterprise applications, and more is taking root at an unprecedented scale. So why is all of this such a big deal? Let's break it down. We're in the midst of an inevitable transformation, the tokenization of assets. The old lines between traditional finance and blockchain are blurring. Wall Street is no longer sitting on the sidelines, it's moving on-chain, and the platform of choice is Ethereum. The world's biggest financial players, asset managers, banks, corporates, are increasingly seeing Ethereum as the infrastructure for the next generation of finance. Liquid staking solves a critical problem for ETFs. Traditionally, when you stake Ethereum, it's locked up and illiquid. But with liquid staking, you get the best of both worlds. You earn rewards and retain the ability to move or sell your assets. The SEC's new stance means ETF issuers can now integrate staking rewards into their products, making them more attractive to investors and potentially accelerating their approval process. This is the kind of regulatory clarity that institutions have been waiting for. Tom Lee has argued that Ethereum's risks are, in many ways, smaller than those of the legacy financial system. Consider this. Even top-tier banks like JP Morgan Chase still see 7% of their transactions flagged as suspicious every year, a reminder that the current system is far from bulletproof. In contrast, Ethereum's blockchain offers transparency, programmability, and an ecosystem that's rapidly maturing. But the impact isn't limited to institutional investors. Small public companies are getting involved too. As of July 2025, corporate treasuries collectively held nearly 1 million ETH, a dramatic jump from less than 116,000 ETH at the end of 2024. For these companies, Ether isn't just a speculative asset. It's a hedge against inflation and a strategic reserve, akin to how gold once functioned in corporate treasuries. All of this points to a transformative period for Ethereum. Regulatory clarity is unlocking new avenues for investment and integration into traditional financial products. The SEC's actions may well be the spark that ignites the next major rally, as both institutional and retail investors move to position themselves for what could be a historic move higher. So where does this leave us in terms of price outlook? Tom Lee, never one to shy away from bold predictions, sees Bitcoin hitting $150,000 by year-end, and potentially $200,000 to $250,000 if strong buying pressure persists. For Ethereum, the upside might be even greater. With Wall Street pouring in, the SEC's green light for staking, and a supply crunch intensifying, ETH could be the trade of the decade. But here's an important note of caution. August is traditionally a tough month for crypto. Historically, it's been a period of volatility and pullbacks. That said, any dip this month could be the last major opportunity to accumulate before a powerful rally in the fall. September, October, and November have often been periods of explosive gains for crypto assets, especially when new money is flowing in from institutional channels. Opportunities like this are rare, maybe once every decade. Right now, both Bitcoin and Ethereum are in what many analysts call major accumulation zones. Institutions aren't just buying, they're accumulating at a pace we haven't seen before. They're playing the long game, and they're not likely to stop anytime soon. A supply shock could hit at any moment. With exchange reserves dwindling and more ETH locked away for staking, the available supply for new buyers is shrinking. As demand rises, basic economics tells us what comes next. Upward price pressure, potentially at a scale few expect. If you believe Ethereum is entering its historic moment, its own 2017 moment, as Tom Lee put it, you're not alone. The market is waking up to the reality that digital assets, especially ETH, are no longer fringe investments. They're becoming a central part of portfolios, both big and small, all around the world. Now is the time to make your voice heard. Drop a comment saying ETH 2017 if you share the conviction that Ethereum is on the verge of something extraordinary. And remember, information is power. Staying ahead of these trends can make all the difference in your investment journey. For those who want to seize this moment, don't forget to stay connected. Like, subscribe, and share this update with someone who needs to hear it before it's too late. Whether you're a seasoned investor or just beginning your journey into digital assets, the next few months could be among the most important of your financial life. Wall Street is here. The SEC has spoken. Ethereum's next chapter is about to be written. Are you ready?